Hey, good afternoon, everyone. It's about 2 o'clock on Friday. Kind of a wild end to a wild trading week. So let's look at it and see exactly what it is that the market's trying to tell us. The big news that we had today was really not much. There's some squabbling and positioning out of Russia, and that's causing some volatility across corn and wheat, and then soybeans. Just they're just no real news there, just continuous volatility in that market. And China was also a big buyer of corn for the week. So that's several days in a row that China's bought corn. All right, let's look at what these charts are doing. Today we do have a double close hook reversal. Didn't get a key because it did not take out this yesterday's high. It did take out the low. It failed to take the high out. So yes, it's a reversal. No, it's not a trend change, but it's definitely a reversal. And maybe what's happening in beans is that the bean market's just saying, hey, the intentions report is next week. We're going to sit here and chop sideways until that happens, and it's pretty oversold or pretty heavily sold. I don't think it's oversold like we talked yesterday, but it may rally a little bit, and we'll go from there. But I don't think there's anything to do here with hedges. The hedge position that we have people in is from up in this area and up in this area. So I think the best move, if you do anything, is you just take a small futures position to neutralize it and then resell it. But for now, certainly we could bounce. We can bounce a little bit higher, but I don't think it's anything to really chase, and it's definitely not a spec long position, in our opinion, in new crop beans. Old crop beans, same thing. It had an even less powerful reversal than the new crop. Clearly, we're below our cloud. We're below all of our hedge lines. There's really nothing to worry about here. We did exit short futures in our spec positions today. We're going to look to resell those on a little bit bigger bounce. One of the reasons we did that is because we reversed down here right on top of the 61.8% retracement level from the large rally that happened throughout the summer. And so even though we're in a downtrend and even though we're bearishly biased and we think we're going to continue lower, still you can't rule out, and you know it's not going to go in a straight line, and a bounce may very well happen, and we may get to add 20, 30, 40 cents to it. Who knows? But for now, we're just going to move to the sideline on that spec position and sit tight with it. Okay, corn. First, let's look at new crop. Here is new crop corn. Let me clean this up because this doesn't really matter. All right. So new crop corn had a really pretty nice bullish day. And what it also did is trade back inside this lower trend channel from that's been developing since last October. And I think that's a somewhat significant deal, especially because the full body of corn, that's the open, the close, the green bar right there, fully engulfed the prior 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days. And anytime a single day engulfs that many days on big volume, particularly coming from the lower end of some of these ranges down here, that signals that corn may be done going down for now, and we may need to bounce it just a little bit in order to hold and get acreage. And so that makes sense when you think about the information flow that's coming in the next couple of weeks into this market. So no new recommendations here. We're going to hold everything that we've got. For most people, the position we're in is we're sold calls up in this area, and we have long puts in May. What we'll probably do next week is we look at May. We closed back on top of our hedge line at the 50% level. We'll probably come out of those calls or out of those puts. We're going to hold our short puts in December and hope to catch a little bit bigger rally into next week, and then move to July to reset those puts from a little bit higher levels. So just stay tuned to what we're doing here, because these markets are giving us some opportunities to spread here a little bit, and I think that's good for us. And if December rallies enough and it gets some exuberance, and who knows where it goes, then we may move those hedges. We may just skip July and move them all the way out to new crop if it rallies enough against old. So we'll just have to see how that plays out. But if we continue to invert and we go higher in July, then that's probably we're going to keep putting our hedges, at least until we have a really strong reason not to. Because I just firmly believe that once this market gets comfortable with supply and understanding that we're not going to run out, that the front month is going to be where we want to be short. So a day is not a trend, but the market is telling us, hey, maybe we've gone enough and now maybe we need to bounce a little bit. That's exactly what this day is telling us, but we'll see what it does on Monday. From a spec position here, if you're short corn, you want to come out certainly above today's high. You want to go ahead and move to the sideline because you're above our hedge line, and there's no reason to stay short. You may as well look to sell it a little bit higher. This is the 200-day moving average, and clearly if we can clear that, then we're not sure what's going to happen with corn, and so we'll just have to take it a day at a time. Okay, now wheat really got exuberant overnight because of the chatter coming out of Russia about shutting down grain exports out of some of the terminals coming out of Russia. And whether there's any truth to that or merit to it, is anybody's guess. We certainly don't know, and I haven't found anything that can confirm or deny it yet. But the market certainly got exuberant, then it backed off, and then it closed kind of right back up into these levels. Look at where we are. We're right below our cloud. We bounced right off the top of it today. We did close above our hedge line, and this Chiku line is threatening to come up into the cloud. And if it's able to come into the cloud and break this price action, then that's a bullish development. And obviously, if it does that, we'll be breaking out the top side of our cloud. So with wheat, we want to start working to neutralize hedges on any move above this 850. Now, that's counterintuitive to us. We are not bullish. We don't think that the fundamentals really support a big move, but the technicals, if we break this level, are telling us the opposite. And so we're going to trust it, and we're going to go with it, and we'll see what happens. Up until today, we were super bearish. Certainly yesterday, we were getting really bearish into this move right here yesterday. It looked like it was going to roll over and die. The market took that away today and gave an unequivocal signal that that is not correct. And so what we need to see is a little bit more strength, and for us to reclaim this top of cloud territory and to reclaim some mobility up into this area. And that's where we want to put re-ownership on. If you're short futures, buying a call is stupid expensive, but probably one that makes some sense. And my advice is counterintuitive here. I don't think that you want to go out of the money and buy out of the money calls in order to quote cheapen them up or save money. I think you'd rather go at the money or even in the money. You'd rather spend up and pay for it because it's going to give you the most bang for the buck if it does move higher, and then you can roll them up or sell them or whatever. But you don't, like a $9 call. It's probably not the world's greatest investment. I would rather go 840 or 850 and just pay up for it, because that at least gives you your delta that you're going to want to have. And but wheat calls are stupid expensive. But nevertheless, if we do break the top of this cloud, it's something that you're going to want to have if we're going to break up higher. And if we reverse and come back down lower, we sell them. It's real simple. We're not trying to take a huge upside risk here because the fundamentals don't really support it. But maybe something will come to light to where that's proven false and that we need to be long. So that's why we go ahead and buy them just in case to protect ourselves. And bigger picture, we've talked about this for a month and a half. The fundamentals are bearish. We certainly think that we're going to oversupply our grain situation, but unless there's something that we don't know. And the position that we want to be in is short cash, short futures, and we want to use options to defend that short position into a rally. So there's no reason to change that philosophy at the moment, because we just want higher prices are good for everybody if we do get them, and we want to be looking to improve our old crop sales, our current sales, and next year's sales if we do get a rally. Because if we get one more shot at it, then we shouldn't dally. We should take it, because that's just how the fundamentals are shaping up. All right, so in conclusion here, we're going to want to put re-ownership on wheat because of two objective signals. We've retaken our hedge line, and above today's high, we're up above the daily cloud. So that is a buy signal in and of itself, and something we don't want to ignore. So we want to buy at the money calls. Old crop corn, we're in the exact same situation. We're coming through our hedge line. It's not quite as bullish of a development as wheat, because we're not quite above the cloud, but nevertheless we want to exit our shorts and look to resell them higher. And if we're able to chop up a little bit more, then we may need to rethink things, or maybe China keeps buying and we really do run out of corn and have to ration it. Who knows? But for now, technicals are telling us, okay, caution, move to the sideline and look to resell a little bit later. And same thing with soybeans. Little reversal, move to the side if you don't. If you don't mind holding it, hold it. You know, that's kind of your preference. And then hopefully we'll get to sell it a little bit higher coming forward. All right. There is risk trading futures and options, and you should only do so in light of your own financial condition. We will be updating these videos all week next week, and especially coming into the intentions report, I would expect a lot more volatility. So stay tuned. We'll do our best to provide the guidance and the clearest picture that we can in real time to you, and we will call it as we see it every day. I hope you guys have a great weekend. We'll talk to you later.